Hello everyone, welcome to the first lecture of Interim Financial Reporting, that is as per Accounting Standard 25. Now, Interim Financial Reporting, we already know that we are studying the subject financial reporting. So, Interim Financial Reporting means in between the year. So, here in this chapter, we are going to understand what all points should be taken into consideration regarding incomes, expenses, when we report them in between the year. Let us begin with the concept of first, what is interim financial reporting? Interim financial reporting is the reporting for a period of less than a year, generally a period of 3 months. So less than a year, maybe 6 months also, but generally a period of 3 months. Why generally a period of 3 months? Look at the next sentence, that will clarify the same. As per clause 41 of listing agreement, the companies are required to publish the financial results on quarterly basis. Means listing agreement means those companies which are listed in the stock exchange, Bombay Stock Exchange, National Stock Exchange, BSE or NSE. So as per the SEBI guidelines clause 41, all the listed companies have to publish the financial results on quarterly basis. So majority of the companies would be definitely listed in stock exchange. So if they are listed in stock exchange, they have to publish on quarterly basis. Quarterly basis means every 3 months. Yes, non-listed companies, public companies which have equity in the market but they are not listed in the stock exchange, they can even furnish on half yearly basis, 6 months basis. But the companies which are listed in stock exchange have to publish on quarterly basis. That's why in the first sentence they say generally for a period of 3 months, because majority of the companies would be listed in stock exchange. So interim means less than 1 year. Less than 1 year, maybe 6 months, maybe 3 months, maybe 1 week, maybe 1 month. But generally the companies report the financial information for every 3 months, that is every quarter. That means they make profit and loss, balance sheet every 3 months. They make final accounts every 3 months so that quarterly performance can also be known to the shareholders. Now, what is the logic behind this? Understand it. You all are studying in third year BCom. So you all give your exams how many times in a year? I repeat my question. You all give your exams how many times in a year? Very first, for the first semester, you have mid-semester exams. Then for the first semester, you have end-sem final exams. Then for the semester 2, you have mid-semester exams. Then for the semester 2, again you have end-sem final exams. So basically, do you also give your tests and exams 4 times in a year or not? Exactly same is the logic behind interim financial reporting. Why does the school or college or university take your tests 3 to 4 times in a year? So that constantly they can monitor your performance. Okay, because otherwise what will happen if the exams are conducted at the end of the year? You will start performing at the end of the year only. Means generally it's a human tendency that if exams are there 1 week before that you start studying. Rigorous study you start 1 week before only, and many of you will be agreeing with me right now because you all have done that in the last semester also. Just 1 week before of your exams, you open your books and your study material. So here also in case of company, shareholders must know the performance of the company every 3 months. Means every 3 months is the company able to earn good profits or not? What is its financial position? So continuously you keep a track on the performance of the company. Like university or school continuously keeps a track of your performance during the year. Shareholders have to continuously keep a track of the performance of the company whole year. That is why the companies, as per the stock exchange clause 41, are required to make final accounts every 3 months because they are listed in stock exchange. People buy and sell their shares again and again frequently, so they have to perform on continuous basis. So I hope you can easily correlate this with your real life also. Okay, so as you give exams 4 times in a year, company is also required to publish the accounts 4 times in a year. As per this standard, which standard? Accounting standard 25. Okay, in the first slide itself I told you we are going to study this as per AS 25. As per this standard, interim financial report means a financial report containing either complete set of financial statements or a set of condensed financial statement. All this is there in the first page of your study material. You can underline that. So what do you mean by financial report over here? Either complete set of financial statement or a set of condensed financial statement for an interim period. So what is complete set and what is set of condensed financial statement, we'll see in the next page. This all is there in your first page of study material, okay? But what is interim period? Interim period is a period of reporting shorter than a full financial year, and we already discussed generally it will be 3 months, okay? So now what is this complete financial statement and set of condensed financial statement? Because when you submit financial report to the shareholders in interim financial reporting every 3 months, you have two alternatives. The companies have two alternatives. Either they can submit complete set of financial statement, or companies are even allowed to submit set of condensed financial statement. Both are allowed. You may submit complete set or you may submit condensed financial statement when you submit for every 3 months. Of course, when you submit at the end of the year, 31st March, then you have to submit complete set only. But in between the year, when you submit it for every 3 months, every quarter, then you have two alternatives. Either you submit the complete set or you submit condensed financial statement. So what are these things? Let us understand in detail. Complete versus condensed financial statement. You all can make this chart in your notebook also. Complete set of financial statements and condensed set of financial statements. Complete set of financial statement means full information. Full information, profit and loss, balance sheet, each and every item as you show on 31st March, every quarter, each and every information you give again in detail. That is called complete set of financial statements. And condensed set of financial statements means less information. Full information is not given. Vital information, important informations, headings, subheadings. So if there is an administrative expense, they may not tell you that how much are salaries, how much is telephone bill, how much is electricity bill, but main heading, total administrative expenses are 50,000. That is what they will report to you. That is called less information. So condensed set of financial statement means complete information, each and every minute thing is not shown in detail. Overall picture of financial position is given. So whatever is important information, vital information, that is only given to the shareholders every 3 months. So in detail, if we see, a complete set of financial statement normally includes, this is there in your study material, balance sheet, statement of profit and loss account, cash flow statement and notes to accounts and accounting policies. Whereas an interim financial report should contain at least the following components. Condensed set means minimum. How much minimum is to be given? Condensed balance sheet, condensed profit and loss account, condensed cash flow statement, and selected explanatory note. Wherever you find condensed and selected, it means what? Full information is not given, less information is given. But how much less? Minimum information which is important to be known to the shareholders is given. That is the meaning of condensed. I hope everyone is clear with this concept. Going further, need of interim financial reporting and problems or issues faced in the same. This is again there in the first page of your study material. Why do we make interim financial report? In general, the basic objective of interim financial reporting is to provide frequent and timely assessment of enterprise performance. Very first page I discussed with you, like for your frequent and timely assessment, the university or college conducts exams every 3 or 4 months. First term exams, second term exams, final exams, mid-sem exam, final exams. In the same manner, what is the need of interim financial reporting? To provide frequent and timely assessment of enterprise performance. Even companies' point of view, it is very good. Every 3 months if they make final accounts, they will come to know where they are going wrong. And they can correct the same in this year itself instead of getting delayed and making the corrections at the end of the year. So company also comes to know where they are going wrong and immediate action can be taken to improvise on the same. Okay. Now, what are the problems or issues faced in the same? Understand it. However, interim reporting has inherent limitation, which is not in the case of annual accounts. As the reporting period is shortened, underline this in your study material, the effects of errors in estimation and allocation are magnified. If there is any error in estimation and allocation, the effect is magnified because the period is shortened. Means if you are going to estimate bad debt reserve, if you are going to estimate bad debts, if you are going to allocate the expenses in first, second, third and fourth quarter, the effect of mistake will get magnified because the period is shorter. In 12 months, larger the period, the mistakes component becomes less. Shorter the period, the mistakes component becomes more. The proper allocation of operating expenses is a significant concern. So the main problems are, first, proper allocation of operating expenses. Operating expenses means what? Salaries, wages, telephone bill, electricity bill, insurance, printing and stationery, advertisement, carriage outward, traveling expenses. So many expenses are these. All are operating expenses. Allocating them in quarter 1, 2, 3, 4 is a big trouble. For whole year we have the complete picture. Some expenses are incurred for fixed duration. So suppose you have advertisement expense incurred for first 3 months only, but it will benefit you for whole year. That we'll see in detail also later on. So allocation of this operating expenses is a big trouble when we make interim financial reporting. And how to deal with that? The solution is given in AS 25. Yes, these are the problems, and these all problems are addressed by AS 25. So there is a problem, but there is a solution also. Okay, so there is a problem in allocating operating expenses. How to allocate operating expenses we'll study in detail in the further next slide as per AS 25. Some operating expenses may be incurred in one interim period and yet benefit the full year of operations. For example, advertisement expense, repair and maintenance expense. So what is the problem over here? See, you spend advertisement in first quarter, but it will benefit in quarter 1, 2, 3 and 4, all the 4 quarters. So the question arises, if in the first quarter you incur advertisement of 5 lakh rupees, should you take that as 5 lakh expense in first quarter, or should you take that 5 lakh expense as 1,25,000 in quarter 1, 1,25,000 in quarter 2, 1,25,000 in quarter 3, 1,25,000 in quarter 4? What should you do? I am not expecting an answer right now. What should we do? We'll understand in the next slide. So what should be done? You don't have to apply your mind. You have to apply AS 25's mind. So AS 25 has given the solution what is to be done. But these are the problems. What is the problem? If advertisement of 5 lakh is spent in quarter 1, the problem is, should entire 5 lakhs be taken as expense in quarter 1 or should it be deferred? 1,25,000 should be taken in each quarter. What should be done? The solution is given in AS 25. Need not worry. Right now we are just discussing what problems we face when we make the report of 3 months or 6 months. Further, seasonal fluctuations. For some enterprises, revenue may be seasonal or cyclical and therefore concentrated in certain interim period only. For example, air conditions. Right now the summer has just begun. So you know, air condition, the peak season is what? April, May, June. Maximum sales will take place in first quarter, April, May, June. Peak hot summer season. Then little lesser sales in July, August, September. And you can say virtually negligible or no sales in October, November, December and January, February, March. So quarter 1 and 2 maximum sales, quarter 3 and 4 negligible sales. Now the question arises, whatever goods are sold or air conditions are sold in quarter 1, 2, should that revenue be taken only in quarter 1 and 2 or should some part of that revenue be taken in quarter 3 and 4 also? So sale in quarter 1, April, May, June will be maximum, but production will be throughout the year. How should the revenue be taken? How should the revenue be taken? That is the problem in interim financial reporting. Solution is given by AS 25. Right now we are just discussing the problem faced in interim financial reporting. Further, year-end events. For example, bonus, incentive based on annual sales target. So bonus. Now see, bonus you will give in March, but it will be paid for full year. You'll give in the last month only. But bonus will be paid for your efforts of quarter 1, 2, 3, 4, all the 4 quarters. So the question arises, should that bonus be taken as expense only in quarter 4 or should that be allocated in quarter 1, 2, 3 and 4? Don't stress your mind right now, because right now I know you would have started thinking what is to be done. But don't do that, because wherever your thinking stops, I've told you this earlier in the last lectures also, wherever your thinking stops, accounting standard starts thinking from that point of time. So wherever you stop thinking, chartered accountants think after that only, beyond that only. So right now don't stress your mind. What is to be done? We will see as per AS 25. Right now, these are the problems faced. If you pay the bonus in the last quarter, should you take it in last quarter only as an expense or should you take it as an expense in all the 4 quarters? What is to be done? We'll see later on. Wait and watch. Further, determination of appropriate amount of provision, pension, gratuity, litigation expenses, etc. Exactly like bonus. We always make a provision at the end of the year. Okay, means you will keep aside the funds for gratuity, pension and all other funds at the end of the year. So should that be taken as an expense only for quarter 4, just like bonus? Or should it be allocated in quarter 1, 2, 3 and 4, all the 4 quarters? And last and major problem, income tax expense. One interim period may have profit. Let us say quarter 1 and 3 are having good profits. Next interim period may have losses. Let us say quarter 2 and 4 have losses. So how will you charge income tax? How will you charge income tax? Quarter 1 and 3 you will charge income tax. Does that mean in quarter 2 and 4 negative income tax because of loss? Or should you charge income tax based on whole year's profit and allocate to every quarter? What is to be done? That we'll study as per AS 25. But these are the problems faced when we do interim financial reporting. Now, the solution. Problems we have seen, now the solution. Recognition of incomes and expenses in interim financial reporting. Ignore the last sentence. We'll see that later on. There are 2 different approaches to be followed. One is integral view, the other is discrete view. Okay. What is integral view? An approach to measuring interim period income by viewing each interim period as integral part of annual, that is financial period, and expenses are recognized. Unlike this, expenses are recognized in proportion to revenues earned through the use of special accruals and deferrals. So what is integral view? The problems which we discussed, that advertisement spent in quarter 1, should it be taken in quarter 1 or quarter 1, 2, 3, 4? As per integral view, you'll take it in quarter 1, 2, 3, 4. Means you'll consider integral view means each quarter is the part of whole year. Each quarter is the part of whole year, integral part of whole year. So if revenue is more in quarter 1, you take more expense in quarter 1. Last sentence, expenses are recognized in proportion to revenues earned. So if quarter 2 has less revenue, less expenses you charge in quarter 2 so that profit is balanced in each quarter. Maximum revenue in quarter 3, charge maximum expenses in quarter 3. Minimum revenue in quarter 4, charge minimum expenses in quarter 4. This is what integral view says. Charge the revenue expenses in proportion to revenue. Charge the expenses in proportion to revenue. Integral view. Every quarter is integral part of the whole year. Every quarter is integral part of the whole year. So in whichever quarter you have more revenue, charge more expenses. In whichever quarter you have less revenue, charge proportionately less expenses. Now discrete view. An approach to measuring interim period income by viewing each interim period separately. Discrete means separate. So quarter 1 is not a part of full year. Take it separately. Quarter 2 separate, quarter 3 separate, quarter 4 separate. In short, as per discrete view, whatever is the income really earned in quarter 1, take that only in quarter 1. Whatever is the expense really incurred in quarter 1, take that only in quarter 1. Even if it is going to benefit whole year, like advertisement. If you incur advertisement 5 lakhs in quarter 1, as per discrete approach, you charge entire 5 lakhs of advertisement in quarter 1 only. Not 125, 125. Integral view says 125, 125 or in proportion to revenue. Discrete view says entire 5 lakhs in quarter 1. Right now also solution has not come. These are the 2 different approaches. Approach 1, integral view. Integral view means every quarter is integral part of the whole year. So every quarter will bear expenses in proportion of revenue. Discrete view, every quarter is independent of full year. Every quarter is to be treated independent and separately. Whatever income is earned in respective quarter, take that in that quarter. Whatever expenses incurred in respective quarter, take that in that quarter. Now these are the 2 different approaches possible. Obviously either of the 2 things are possible. Either you take advertisement 5 lakhs in quarter 1 or you take 1,25,000 in each of the quarters. So 5 lakhs in quarter 1, discrete view. 1,25,000 in each quarter, integral view. Now what are we supposed to do? As per AS 25, AS 25 resolves the debate by prescribing the discrete view in general. So what are we supposed to do? 5 lakhs advertisement in quarter 1. Sale of air condition is maximum in April, June, May and June. Take maximum revenue in April, May and June. Less revenue in July, August, September. Negligible revenue in third and fourth quarter. Bonus paid in March, take in last quarter only. Provision of gratuity done in last month, take in last quarter only. Okay, so we have to follow discrete view in general, means for all incomes and expenses. Any income earned in quarter 1 will be taken in quarter 1. Any expense incurred in quarter 1 will be taken in quarter 1, even if it is going to benefit the whole year. So solution is done. I told you, maximum of you would have been thinking that advertisement should be taken 1,25,000 in all the 4 quarters. Is it or not? Come on, tell me. Were you thinking the same or not? But you are wrong. I told you. Wherever you stop thinking, chartered accountants start thinking from there. So why is this done? To avoid any manipulations, malpractices and fraud by the board of directors. Otherwise, what they will do? Every quarter they will try to show profits only by manipulating and transferring the incomes and expenses of one quarter to another quarter. So SEBI has strictly given the guidelines every 3 months you have to publish, and chartered accountants supported that by stating that even if one quarter is a loss, no problem. You'll be comparing it every year. Whenever you publish the financial statements, you publish it for last 3-4 years. So current quarter will be compared with last year's quarter, last to last year's quarter, last to last year's quarter. So shareholders will also come to know that this is a seasonal product, and so this is not a season for the company. Therefore, there is a loss. So no negative impression will go in the minds of the shareholders. So finally, what we are supposed to do? Discrete approach. Whatever incomes are earned in any quarter, take in that quarter only. Whatever expenses are incurred in any quarter, take in that quarter only. As per the standard, income and expenses should be recognized or measured on year-to-date basis. Underline year-to-date basis for interim reporting. What is this year-to-date basis? Year-to-date basis means financial reporting for the period which begins on the first day of the fiscal year and ends on the given interim date. So year-to-date basis means when you report to the shareholders for first quarter, April, May and June, you will submit the report of first quarter, April, May and June. But when you report for second quarter, July, August and September, you will not report for July, August, September. You will report from April to September, year to date. From the beginning of the year till that date means you will submit information of 2 quarters. April, May, June also, July, August, September also. So that confusion to the shareholders will get clarified. That in first quarter 5 lakhs was incurred as advertisement, but when you submit April to July, then that profit will get consolidated. So shareholders will come to know it is benefiting the further quarters also. So when you submit the information of third quarter, you will not submit only third quarter, October, November, December. You will submit from April to December, means 3 parts of your financial statements. Quarter 1, April, May, June. Quarter 2, July, August, September. Quarter 3, October, November, December. And when you submit the last quarter, you will submit year to date, means April to March. So what do you mean by year to date? When you submit second quarter, you don't submit second quarter alone. You submit quarter 1 plus quarter 2. You report to the shareholders quarter 1 plus quarter 2. When you submit third quarter, you report quarter 1 plus 2 plus 3. And when you report fourth quarter, you report quarter 1 plus 2 plus 3 plus 4. Now this last sentence, which was there on your page from the very beginning, now understand that. However, there is a slight deviation in recognizing the income tax expense, which is not based on discrete view as explained above. Now see, what did I make you underline above? By prescribing the discrete view in general means not everywhere. In general means not everywhere. Majority places. So majority incomes and majority expenses you will take on the basis of discrete view. Discrete view means whichever income is earned in that quarter, you take in that quarter, expense of that quarter, you take in that quarter, but not everywhere. Not everywhere means where we do not apply discrete approach, income tax expense. Income tax is taken on integral view approach. So income tax is the only expense. Income tax is the only expense which is taken as per integral view. All other incomes and expenses are taken as per discrete view. I repeat, income tax is the only expense taken as per integral view. All other incomes and expenses are taken as per discrete view. Okay. As per the standard, the income tax expense is recognized in each interim period underlined on the basis of estimate of weighted average annual effective income tax rate expected for the full financial year. What is this weighted average income tax rate expected for the full financial year? We'll see in detail with the practical question, but suppose quarter 1, there is profit of, let us say, 10 lakhs and there is income tax applicable on that was 30%. Quarter 2, again 10 lakhs, income tax applicable was 30%. Quarter 3, 5 lakhs, income tax applicable was 35%. And quarter 4, 20 lakhs, income tax applicable was 40%. So what weighted average annual effective tax rate means? First quarter 10 lakh you give the weight of 30%. Yeah, rather 30% income tax you give the weight of 10 lakhs. Second quarter 30% again you give the weight of 10 lakhs. More income. Third quarter 35% tax rate you give the weight of only 5 lakhs because 5 lakhs income is only earned in that quarter. And fourth quarter 40% income tax you give the weight of 20 lakhs because majority profit is earned in that quarter. And then you find weighted average of that income tax rate that you will apply for full year. So income tax is the only approach where we take integral view. Every quarter is considered as a part of the whole year because of the profits and losses. Everywhere else we apply discrete approach. In detail you'll understand about this when we start with the practical questions. Today's lecture's intention was just to get an overall idea what is interim financial reporting, why interim financial reporting, and how to apply AS25 rules. So in general you just remember the concluding statement of this lecture that all incomes and expenses except income tax will be taken as per discrete view. Discrete view means any income and expense of quarter 1 will be taken in quarter 1 only, same way with quarter 2, 3 and 4. However, income tax will be taken as per integral view and it will be taken on the basis of weighted average annual effective income tax rate. In detail, we'll understand with practical question the same concepts in the next lecture. That'll be all for today. Bye everyone. Take care. See you in the next lecture.